Hello, everybody, and welcome to today's episode of news that Ryan is bringing us. This is actually one that's near and dear to both of us. It's a couple of friends and a client of Ryan's, and it's really fun. I'm anxious to bring this article to light, Ryan, and highlight it because it's not only people we know. I always, start the intro and then I wander down the path that I wasn't supposed to travel here, so I'm just going to meander a bit. But this article has been in such the forefront for the last 2 years at least, but powerfully in the last 3-4 months. So it's interesting to actually know people who are making the news about it. So I'm excited. I was about to give a teaser and tell what the article is about, but I'm not going to do that. First, I'm going to tell you guys not to listen to us. And anything we talk about, we analyze, vocalize, or show you on the screen is purely for education and entertainment purposes. But with that being said, I'm not going to ruin this. I'm going to let Ryan take it away. Ryan, what do we got?
Thanks, Alex. So Valkyrie Investments, the Nashville-based asset manager, they're an emerging manager, has pretty much, from a procedural standpoint, taken pole position in the race to launch a Bitcoin ETF. They 2 months ago, they applied confidentially for a Bitcoin futures ETF because emerging managers are allowed to do so. So you might remember back about 2 weeks ago, a wave of applications came across after SEC Commissioner Gary Gensler said he was open potentially to approving a Bitcoin futures ETF. This application came 2 months ago, so they're well ahead of everyone. And the reason that no one knew about it, as I mentioned, is that emerging managers are able to file confidentially to protect their intellectual property. And the applications don't become public until what's called a 19b4. Which opens up, it's a rule change request by, in this case, NASDAQ, and it opens up the review period for the application. So since they are the only ones right now that have the 19b4 filed, I think they've kind of caught every other asset manager flat-footed, Alex.
Yeah, I'm wondering, have you heard any rumblings yet that people were kind of caught out? Because it seems, because this was just thrown out. I mean, there's no warning shots on this becoming public. Do you think that there's going to be a couple of those high-profile competitors that are going to be like, whoa, what just happened?
Oh, absolutely. Right? Because all the other high-profile competitors cannot file confidentially. They all have to file publicly, right? And the reason that the intellectual property protections are afforded to smaller managers is because they can get blown out of the water by a larger manager seeing the application, pretty much copying and pasting it and submitting it to the SEC. And if they get approved at the same time, their distribution just takes the smaller guy completely out of the game. Whereas if you're a smaller guy, you can apply confidentially and you get approved first. Look what happened up in Canada with the Prosper ETF, the Bitcoin ETF. That first one, there were 2 others, that first one quickly gained over $1 billion in assets under management. The other guys kind of floundered. And Prosper isn't necessarily the biggest asset manager in the world, so getting first in this case would be massive. And I know the team over at Valkyrie, they're all ex-Guggenheim, World Bank, UBS. They know everyone. So it's just a matter of if they think they're going to get approval, once they get approved, it wouldn't be all that difficult for them to get the distribution that could help them rival the bigger guys like a Van Eck or an Invesco or something like that, all these other asset managers that have applied for Bitcoin futures ETFs. This is a massive, massive coup for them.
Well, there's something for you folks. Wall Street caring about the little guy.
The regulator caring about the little guy, not Wall Street.
About the little guy.
But what's also compelling about this is that this is the only pure play futures product. All of the other Bitcoin ETF applications, they're N1As, which is under 40 Act, which is a 40 Act ETF, which means that they have to hold a form of securities with the Bitcoin futures that are traded on the CME Group exchange, CME. Whereas this is an S1 that was filed 2 months ago. It's a 33 Act fund, the Securities Act of 1933, and that allows them to hold only Bitcoin futures And they have to hold a small amount of treasuries just because they're required for margin to buy the futures. But other ETF applications, if you dive into their M1A forms, which are easily findable on Edgar, the SEC database, they're all holding a mixture of Bitcoin futures and Bitcoin securities. So GBTC, perhaps a few other equities. So you're forced into GBTC even if you're trying to avoid it. This is the only fund that I'm aware of and that anyone else is really aware of, unless something else was filed confidentially and they just didn't get their 19B4 in yet, that is pure play futures. This is
so cool.
It's game changing, right? And the reason why so many people and Gary Gensler think that this will be more, not easily approved, but it's more likely to be approved is because the Bitcoin futures already trade on a regulated exchange. So all you're doing is rewrapping a regulated product and collateralizing it into an ETF to make it available to more people. Whereas Bitcoin isn't regulated by US regulators, so wrapping Bitcoin in a spot Bitcoin into an ETF is so much more challenging, and it would require regulation of Bitcoin probably before you can have that kind of ETF, before you can have a regular Bitcoin ETF. This really is a monumental story that came out today.
You know, I give many props for using the 33 over the Act 40. That was well played, my friend, as they say. Because
sorry, you were saying?
No, I'm just saying because 40 Act is the go-to. It's what fund managers, it's the lazy route. I don't want to say lazy route. That's the wrong word. It's the easy route. The 40 Act was created for a reason, and they just go to it. But obviously getting kicked in the shins every time they walk up the steps in Washington to go the 33 route was brilliant.
Genius. And having it list on NASDAQ, which is why NASDAQ filed the 19B4. So having it trade on NASDAQ makes it even more available. So easy to gain distribution.
Yeah.
Other funds, they trade on secondary exchanges sometimes, like BATS or CBOE, are not on NASDAQ. So this is absolutely brilliant.
Yeah. And, when you go through those 40 Act funds, too, folks, you should pay special attention to the liquidity because just like a crypto coin, 40 Acts need liquidity in order to trade. You need both sides of the trade to effectuate it. And what you'll surprisingly see when it comes to 40 Act funds is there's a lot of illiquidity in that market space. So, going the 33 route, going NASDAQ, I think it's brilliant. I think they're off to a great start. And it's the underdog. There's some of the smartest people in the room. And I love rooting for the underdog. I'm glad they did that. Valkyrie for the win.
Indeed. And this comes off the back, as we mentioned earlier, of a handful of other asset managers filing for Bitcoin futures ETFs. Valkyrie has another fund that was filed under the M1A, which is the 40 Act fund. They have one of each, but that one was publicly known. You have Van Eck, and then you have Invesco and ProShares, and you have all of these other firms that are looking to capitalize on increased demand for Bitcoin futures and, capitulate on the comments that Gensler made where, he said it makes sense he didn't necessarily say it makes sense, but he intimated that it makes more sense that an ETF tracking Bitcoin futures would be approved before a Bitcoin spot ETF would be. So this feels like it does feel like they're in the lead here, Alex. It really does. It feels like they're the ones who are, if anyone's going to get approved, it feels like they are probably going to be the ones that get approved first.
Well, I mean, like we spoke about before the show, if it wasn't made public and it wasn't, kindly commented on, then it would be negative. But I think the way it's been delivered to the public, I think is why there's so much enthusiasm and support for the approval process.
Indeed. And one more important point, I think, just to go back to the idea that Valkyrie's 33 Act fund is the only pure play fund. Van Eck's Bitcoin futures ETF actually also seeks to invest in Canadian Bitcoin ETFs. So you have a combination of like the Prosper ETF, GBTC, Bitcoin futures, treasuries, and possibly some other equities. And it doesn't feel like it's true to the mission there, right?
Yeah.
It doesn't, I don't know, it's confusing. right? It's absolutely confusing. So I think, I don't know. Maybe I'm biased, but I feel like a fund that invests solely into what it's supposed to invest in, even though most ETFs don't because they're 40 Act funds, those that do are the ones that I'd be more likely to invest in.
Yeah. I mean, it's the ones that are easy to read, so to speak. They understand, there's you get a feeling of seeing under the hood a little bit as far as transparency. So are we going to hit them up with the other news now?
I think so, yeah, because this is also equally important. Citigroup is now looking to get into trading Bitcoin futures. So it's working with regulators to be able to trade the futures that trade on the CME. So now, in addition to other firms that we have heard of trading them, I think Goldman, Wells, a handful of others, Citigroup now wants to join that. So it's only a matter of time before they're offering these products to their clients and trading them potentially on their prop desks until they start wrapping them into products that are more easily accessible to the broader financial community. So this is just further proof that, remember we were talking last year, Alex, about how VIX futures didn't necessarily see uptake right away. It took a little while for them to catch on. All of a sudden, it was like a house on fire.
Yeah.
Same thing happening here with Bitcoin futures. It took a little while. People wanted to feel them out. Firms wanted to feel them out, see how they reacted to Bitcoin spot price. And the house isn't quite an inferno yet, but the fire department needs to get there soon to put it out before it is. Like it's burning up.
I mean, you remember when BOT first launched, going back to 2018. It was the winter of 2018. It was crypto winter. We were all putting our heavy coats on, ready to bear out the next 3 years. But that was a big deal. ICE backed, ICE owned, and you look what happened. Nobody showed up for the grand opening party, and no one did for a while. To your point.
Yeah, but even the Bitcoin futures on CME, right? No one cared.
No one showed up for that grand opening party either.
There were a few trades, but crypto native people, crypto traders who didn't see immediate uptake because they only know number go up, they immediately thought that it was a failure. Yeah. And people in the financial markets and traditional finance, these firms don't move quickly. They're not breaking things. They're not asking for forgiveness later. They're waiting for regulators to clarify, and they'd rather ask for permission, because when you have to ask for forgiveness, it doesn't go too well. And
no, go ahead.
Oh, I was going to say, and doing things with permission means that not only are you within the confines of the rules and regulations, but it's also actions that your clients will trust more, instead of you constantly having to pay out fines and answer questions.
I think, also you got to remember the time it was. When CME came around, basically you're saying, hey, we launched these regulated futures. Now try walking into a 20-year pedigreed fund manager and saying, hey, you guys interested? They're like, what? To come with an instruction manual? Half of them didn't even know crypto at the time, and the retail traders weren't busy opening up regulated futures accounts, because at the time we had Arthur Hayes. I can't believe I forgot the name. We had Arthur Hayes' exchange and Deribit. And they were killing the futures market. That's where everybody was going. They were the two highest volume exchanges in existence, just dealing in futures.
Right, but they were unregulated, and they were largely big time. Yeah, they were also populated mostly by unsophisticated traders who were leveraging up to 100x and just getting destroyed. Whereas CME and a few other venues that now exist, and sophisticated firms like a Citigroup or a JP Morgan, or some of the others, asset managers like a Guggenheim, or others that have started getting into this space, they're not necessarily going to do that, and they'll be a little bit more measured in their approach, one would think, just because they kind of know what they're doing more. And Citigroup is also looking to trade Bitcoin exchange traded notes as well on CME. So they're really ramping up their interest in this space pretty quickly.
Now, for everybody not familiar out there, ETNs, the exchange traded notes, have been available for firms in the U.S. to trade for a little while over in Canada. And it was basically at one point the only exposure that a traditional institutional trading desk could actually do, either from an issuance standpoint or a participation standpoint. So ETNs were like, you'd have Cowan and Company or something. They'd be like, "Oh, we're trading ETNs in Canada," and you're like, "That's great. I actually own the Bitcoin. It's in, But I wanted to also touch on real quick, going back to the futures exchanges and show you this. So, like on our alerts on the dashboard, we have an alert section here on Trade the Chain. And you could see every minute of every day. Here are all the amateurs getting blown out of their options positions, getting liquidated basically. So it's a tricky game to play, and that's why the regulators are looking for the sophisticated platform entrants.
Absolutely, and it looks like they're coming in droves. Didn't Bank of America also recently start clearing these types of trades for hedge funds in Europe?
Yep, they did. UBS as well, and
Deutsche.
It's
doing it in Germany as well.
Let's just say all of them. It's almost all the banks now. But what's funny is you go back 1 year ago, 2 years ago, and obviously we all know Jamie Dimon's famous quotes: "I'll fire any trader at JPM if they touch Bitcoin." It's funny how the tune has changed. I'm interested to hear what people have to say about that and what their thought rationale is. But banks who hated Bitcoin or cryptocurrency in general are now diving headfirst to get into it, as always, late to the game. And the interesting part is some of them still, who now participate in crypto, still will block retail checking accounts from funding crypto exchanges like Coinbase, regulated crypto exchanges.
This goes back to your article published last year on CoinDesk, talking about how these firms that aren't crypto native are going to be so slow to adapt and so slow to understand this market that it might be too late. And it still very well could be too late, right? Didn't the US government, instead of going with what State Street or Bank of New York Mellon are doing with crypto custody, they went with Anchorage.
Okay.
And
going back to that article real quick, Ryan, what was the thing I said in that article to the point you just made? That was written 13 months ago in CoinDesk. And in that article, I said, listen, the banks are going to be slow to respond and adapt to the change, but even the players will still go to crypto native firms rather than the banks. And to your point, what did the U.S. government do? They didn't go to J.P. Morgan. They didn't go to Wells Fargo. They didn't go to Boney. They went to Anchorage, a crypto native company.
Exactly. So I'm curious to see how adoption pans out over the next, say, 6 months. If institutions go to institutions, if big players and whales go to institutions, or if they go to the crypto native firms.
I'm curious to see when you walk into your branch of Bank of America or Wells Fargo a year from now, when Bitcoin is being offered to retail customers. You ever walk into a bank and you see like CDs being advertised, for like, hey, you almost have to pay us to invest in this CD. And there's no lines forming at the window for the CD to buy them.
No.
I wonder if crypto offerings at banks will have the same desolate feel to them as CDs. Or are these banks going to actively educate? Because that's what they're going to need to do for a retail adoption through the traditional banks.
Exactly. And I don't think they have the patience, or they have the resources, but I don't think they have the patience or the understanding to educate the public on them.
Exactly. And that's why I'm letting Wells Fargo and Bank of America and all the other banks know right now, Ryan Gorman is for hire if you need an educational purpose to go neighborhood to neighborhood on your behalf and sit in the branches and educate.
Can't wait.
Ryan, thank you so much for bringing us the news today. That's really big stuff, and kudos again to Valkyrie and yourself, of course, man, because Valkyrie, in full disclosure, is one of Ryan's clients. So,
Yep.
Power to him. Folks, we'll see you tomorrow. Same great time, same great channel. Have a great day. Hang on to your handlebars, folks.
Bye, everyone.